Hello guys, welcome back to my channel. In today's video I will show the detailed breakdown of my recent trade that I took on 20 August 2025 yesterday. So let's deep dive. First I will show you the 4 hour because I usually use the 4 hour time frame and daily time frame for my direction and bias, and then I wait for confirmation on 15 minutes for my entry model to set up. So first let me show you the 4 hour daily bias that I built and I posted that on Twitter. First I marked this zone when uh, price was reacting from this zone, so I marked this FEG, and I was expecting that price will dump from this FEG to this sell side liquidity. If I show you on my Twitter account, you will see here that I marked this zone when price was reacting from this order block. This is the order block that I marked, and price was reacting from this zone. I pointed attention to this FEG and order block, but price dumped from this zone and took the sell side liquidity. As you can see, price went up, rallies up to the side and give me a CRT model, but I missed this trade because of the bad weather in my city, heavy rainfall and due to internet problem. But then I pointed attention to this sell side liquidity and I was waiting for a CRT to form at this point, and as you can see, price sweep the liquidity, this liquidity, swing low liquidity, and body candle closes inside the wick of the previous candle, so this become range. We Most trader, the CRT trader, believe that every candle is a range and it has a liquidity at the high and both at the high and the low. So we wait for the high or low to be swept and candle body closes inside the wick at the key level. So this was the key level, the ERL, and now I was expecting that it will uh, move to the IRL, which is internal liquidity, and this was external liquidity. So this was my first target and this was my second target, FEG. Sorry, this was IFEG that prices violated and it became the IFEG. This was the FEG. Now let's see, this was the trade that I captured. It was about 1:3 RR. This is candle range high that price printed, candle range high, and this was the candle range low. I basically combine the concept of ICT and CRT. I use ICT to build my bias and then use uh, CRT to capture the trade or build a strong bias in the lower time frame. So this is CRT low. So I will explain the CRT concept. Most every trader that trades CRT concept believe that every candle has uh, high liquidity. Every candle is a range and it has a liquidity below it and also above it. So whenever price sweep the low or high, we expect that it will move to the opposite side. Sorry, this is so sticky. So if price sweep this low, we expect that it will move to the high, but if it swept this one, the high, sorry, like this, and body candle closes inside the wick, this is must, body must be closes inside the wick. So we expect price to move to this low, but this must be at the key zone, like here it was 4 hour FEG, this was a key level, and here I marked the sell side liquidity which is ERL, so this was also a key zone. So you must watch price to form this CRT model at the key zone, and then you can target the opposite range. Same happened to this. Price swept this low. Now my first target was CRT high, and my second target was this FEG, and as you can see price dumped from this FEG. Now let's move to the 15-minute and find our entry model. So let's mark this zone, and as you can see here, sorry, guys. So this was the zone, price was reacting from this zone, and price clearly, if you haven't seen, watch my entry model video, so please watch that. It will be very helpful for you guys. I use this model on every trade. First I look for CRT to form at my entry at my key level, and then I look for this model at the at the key zone after the CRT is formed. So this is turtle soup. First I wait for turtle soup. This is turtle soup, and after that price printed a clear CRT CISD, sorry, this is CISD. Body candle closes above, so price also created IFEG. Let me mark this for you. $15 IFEG, and I place my order at the 50%. You can place at the 50%, which is mean threshold, also called mean threshold, or at the start of and your first target is this, which is almost 1:3, not almost but exactly 1:3 ratio, and price dump here activated us and then gave a rally to the upside and hit our TPs. So this was the trade that I took yesterday on 20 August. Let me show you this on X. This was a model. First I pointed attention to this CRT, and then I went to the 15-minute and I waited for the price to dump to the IFEG, and then I entered here, and then price rallies up and hit my final TP. So this was the short trade that I took yesterday. Thank you for watching in this video. I hope you would like this trade breakdown, and if you want I can also create a detailed video on CRT. So thank you guys for watching this video. See you in the next one.